Hello there, and welcome to the AiCR Exchange. My name is Joe Furlong, and we're here in episode 2 with a good friend of mine, Eric Dunham. I've known Eric for more than 20 years. It's been about 22, 23 years, Eric, if you can believe that.
Yep.
And we're going to be talking about commercial lending, specifically SBA lending. But before we do that, Eric lives in South Carolina, and like everyone else in this entire spot right now, got hit by the winter storm. So the first question for you, Eric, how'd you make up during the winter storm?
Hey, Joe, thanks for having me on. So we did really well. We, all week, like everybody, we were watching the weather forecasts, and they were saying up to 2 inches of ice. And being from Florida, I didn't know what that meant until I did a little looking. And basically, 2 inches of ice is a catastrophic storm. And we were very fortunate. The entire thing blew north of here, and all we had was some freezing rain with no accumulation. So the whole area was sort of on edge after Hurricane Helene, because we were hit pretty hard here in September of 2024. So we were all breathed a big sigh of relief when this thing moved away over the weekend, and woke up Sunday morning with a very pleasant surprise. So, but I know the rest of the country wasn't always so lucky.
Well, I'm glad that you did get hit, and for all those people out there and across the states that got impacted, I hope it all goes very, very well.
Yeah.
So I want to open this up, Eric, because this is an important question.
Yeah.
A lot of people hear about SBA loans, but they may not know the difference between how does SBA compare to traditional banks. Can you give us like even a high level of what SBA loans are and why they do?
Yep. So back in the 40s, the government came up with a zero-cost program called which is now the Small Business Administration, and basically the program was where the government gives a loan guarantee to the lender to help secure their position on behalf of the client. We see it most often where, for example, if somebody is buying a business and there's no real estate involved in the transaction, only some light assets, maybe some equipment, furniture, fixtures, that sort of thing. You're basically making a loan that has a large gap in the collateral, right? And the SBA loan guarantee comes in behind that loan and guarantees typically 75% of the transaction, which gets the lenders comfortable in order to proceed with the loan.
Okay, so how often is an SBA loan associated with real estate compared to when it's not? Is it 50-50 or is it a big difference?
So yeah, great question. Most of the transactions we see are non-real estate. So the business acquisitions is again one of the things I specialize in. We look at small business purchases all across the U.S. up to about total transaction size, maybe up to 10 million or so. And those along with other types of transactions like equipment purchases or refinance probably account for, I would say, somewhere around 75% of the total transactions. So real estate is not a majority of what is done out there in the SBA world. It's primarily non-real estate transactions where the program's used most widely.
Really, that's fascinating. I
Yeah.
thought it was exactly the opposite. So let me ask you. Here's a scenario. I want to go buy a dry cleaner, and it's just the business.
Yeah.
And I need funding on the acquisition of that business.
Yeah.
As you're saying, that's most of the time what you do.
Business acquisitions. Yeah, that's mostly what we focus on. We can do anything that SBA offers, which is refinance, real estate, equipment purchases, working capital, what we call rent replacement, which is where somebody who's leasing a space may buy it. But business acquisitions are, at least right now in the market, sort of the predominant SBA loan type. Most of the lenders are actively involved in doing them. And so, yeah, those originations, are typically up to, again, purchase prices of about 10 million. Now, the SBA program limit currently is 5 million on the SBA 7A, but some of the lenders will come in with some additional cash through a secondary loan, which we call pari passu. Same lender, just adding on a second piece to help maybe increase the loan amount. to $7 or $8 million. In that case, of course, the client and the seller who may hold a note would come in with the balance of the funding to finish the deal.
So, outside the acquisition transactions, you mentioned that there's other things. I think you mentioned like rent replacement, etc. So,
Yes.
if I actually own that dry cleaner as an example, and I just need to refinance something or other, I can still go through SBA and do the same thing.
You can. Yeah, great question. So, what the SBA is looking for is in the absence of collateral, we have the loan guarantee, but typically the other, what we call credit factors, need to be not necessarily strong, but at least okay. So they're looking at things like experience of the purchaser. They're certainly looking at the cash flow of the business to repay the loan. That's really the most important thing. And any good lender, SBA lender worth his salt, the first thing they'll do is take the tax return, spread the numbers, and make sure there's enough cash flow to buy the business, to pay for the loan to buy the business. So I would tell, clients who are thinking of selling to make sure that they're always, preparing their financial statements according to GAAP and completing their tax returns consistent with their financials and, reporting all their income and showing that, because it becomes very important when a lender's considering a buyer who's buying a business, that the business can make the loan payments, right? We don't ever want to put anybody in a situation where, they can't make the loan payment. That's not good for the lender, not good for the client.
So, yeah, I've always heard, I've never been through the SBA process my entire life, so I'm always hearing what's out in the background and what people are talking about it. And the thing that I've heard all the time, that SBA loan process can be cumbersome and burdensome with paperwork. Is that true, or is that just like a myth that everyone kind of perpetuates?
No, that's actually very true. It's of all the different lending types out there, residential lending, commercial lending without SBA, it's definitely the most document intensive, because you are asking for the government to guarantee the loan. And there's a long checklist of things that the government wants the lender to have in the file. And then those files get audited post-closing. The government comes in, they look at them, and everything that is supposed to be there needs to be there, right? So there's quite a bit of document. They don't leave any stone unturned to vet the deal, the client, and then the business that's being purchased, for example, as well. So yeah, it's a very document of all the different types of lendings, probably the most document intensive form of lending out there.
Wow. Okay.
Yeah.
So what part of the loan process causes the most delays, and what can the borrower do to streamline? Is it really making sure they get with a really experienced person like you to be able to guide them through it? Is there more to it?
Yeah, good question. So you always want to work with somebody who obviously knows what they're doing. A lot of times it's the 80-20 rule, regardless of the industry. So there's a handful of really knowledgeable SBA lenders out there who will guide the buyer through the process, or the borrower through the process, depending on the loan type, of course. And yeah, it's important to have all your documents prepared. For example, right now, since we've crossed over into 2026, most of the lenders are saying, hey, in order to get this approved and get it closed, we need a 2025 tax return filed, right? Now, most people aren't filing their tax returns until April or even maybe October. But if you want to get an SBA loan or help facilitate it as a seller, you're going to need to be able to provide those tax returns. So one of the things we do, and starting in the month of, say, October and then November into December, is we advise our clients, hey, you need to be ready, talk to your accountant, so that you can provide the year-end tax return, in a reasonable amount of time, if you want your loan to close in a reasonable amount of time. So those are the kind of things that, kind of knowing where the pitfalls are in the process. We're good at guiding. I've got 26 years of direct lending experience, and we're good at guiding the client through the process so that we minimize the amount of errors and in the process by making the client aware of what needs to be done in advance and preparing the file accordingly, which is really a big difference between one lender versus another. Because the process, if you're with a lender or a BDO, business development officer, who doesn't really know the process, or they're not on top of their game, yeah, it can be a small nightmare to get your loan through.
Yeah, that makes sense.
Yeah.
Now, going back what you said with the acquisition, you said up to 75% loan to value. Did I hear you correctly?
Yeah, 75%. Well, 70 with the so the SBA 7A program typically will offer a 75% guarantee of
Okay.
the loan, right?
Okay.
There are some cases where if somebody is selling a product in America and they're selling it overseas, even just a little bit is being sold overseas, even Canada, Mexico, the Bahamas, or Europe, anywhere outside the borders of the U.S., then that particular deal may qualify for a 90% guarantee under what's called the International Trade Loan Program. And so if you have a 90% guarantee as a lender versus 75%, and you're making a $5 million loan, that's a big difference. That 15% of, say, $5 million is significant, right? So on deals like that, where there is some overseas sales, the 90% international trade loan guarantee, all within the same SBA program, can often be had, and that will help the lender in their decision to probably lean towards an approval, especially if the deal's on the fence, knowing that they're more or less pretty well secured at that point.
So does that mean that the borrower has to come up with 25% or 10% in cash to complete the transaction?
Great question. So the way the SBA program works is that the borrower is required to come in with a minimum of 10%. So the rest of the transaction, for example, and again, I keep going back to business acquisitions, but the rest of the transaction can be financed at 90%. The way it would typically look is the lender would come in for 80%, the client puts in 10%, or the client or the buyer, and then we with a business acquisition, we often ask the seller to consider holding a 10% seller note. We want to see the seller tied to the business after closing, because we feel like that helps decrease a little bit of the risk if they have a stake after closing in the form of a promissory note. So yes, the client will come in with 10%. There are situations where the seller can actually put in half of the buyer's down payment, we'll say 5% of the transaction, so long as that 5% is held as a standby note. That simply means it can accrue interest, but there's no payments made by the buyer until the SBA loan's paid off. So it is possible to come in with as little as 5% cash down.
Wow, that makes a big difference.
It can, yeah.
I almost equate it to like right now, a lot of people are contending, and rightfully so. It's so hard to get in the property ladder. They can't get the first house, whether it's too expensive or it's an affordable issue. They don't have the money, whatever the case may be.
Yeah.
And I also know that there is a lot of people out there who would love to be able to own their own business. And being able to get financing on that is, an important part of the COP, because a lot of people don't have money to just buy it.
Yeah. Well, you see a lot of people right now, as the baby boomer generation is the largest demographic, we're seeing a lot of baby boomers who built businesses who are now selling them. And the typical type of buyer we see is somebody who's got a corporate background, either as an employee or maybe a C-suite type of person. I've got several of those who are, good credit, good personal liquidity. They've been in the corporate world. They ran a division or something on that scale, and now they want to own their own business, right? So we're seeing a lot of the buyers out there who have the experience, and it's either direct experience, meaning I've worked in that industry, or it's translatable, right? So if you ran a division for a large publicly held company, and your industry was in, the HVAC, but you wanted to buy an electrical company or something, or even a manufacturer, we would look at you and say, well, you may not know too much about manufacturing processes, but you sure do have a lot of corporate background that lends itself nicely to give us confidence that you can run this business. You'll figure the rest out during the initial training period, sort of thing. But that's who we're typically seeing right now, is people who have worked in the private sector most of their life or all their life, who now want to get into owning their own business.
Fascinating. you talked about these multi-million dollar deals, which I know that's prominently where you focus your attention. Is that correct, Eric? You mostly in the larger deals?
Personally, yeah.
Yeah.
Yes.
What some people may not be in a position to buy a $5 or $10 million business. What I mean, generally, how small of a loan? What's the minimum loan amount for SBA if I want to just get going?
So the loan amounts will drop down below 350,000. Once it gets below 350,000, we tend to offer the client. We have another option too. We call it the Game Changer program, but basically it's a non-SBA type of loan that's reasonably priced, reasonable terms, and we give the client the option to go and fill out our application. It's a soft credit pull, and if they qualify based on their existing income, assets, and credit, we can help them get the loan that way, because whether it's a $250,000 loan or a $2.5 million loan, the SBA processes, and there are some differentials on the smaller stuff with express programs and all, but generally speaking, it's still pretty document intensive. So we give an option under a certain amount. We can certainly look at it as an SBA, under 350 as well, but typically we try and give that option. Most of the deals, like, we're very good at processing the small deals. We have a really great team set up for that. So our bread and butter is deals that probably fall somewhere between 350 and $1 million, right?
Wow. Okay.
And you'd be surprised how many people can qualify for $300,000, $400,000, $500,000, $600,000 loan to buy a business, because so long as you've got decent credit, a little bit of what we call post-closing liquidity, and the business can cash flow itself reasonably, and make the loan payment comfortably, then you're probably a good candidate for business ownership.
So this is what I'm hearing from you. Okay.
Yeah.
So if someone has some basic or base financial capability,
Yep.
they can find 5 or 10% cash down. They can find a $500,000 or $600,000 business, and there's a really good shot that they can get an SBA loan. It's where they can start that journey of actually being an entrepreneur, which a lot of people in this country want to do.
Absolutely, yeah. We get a lot of clients who will come in, they'll buy a business, $500,000-$600,000. They'll take possession of the business, they'll run it successfully, grow it, hopefully, over the course of a year or two, and then say, look, we want to buy our competitor over here. We want to expand. Now we want to borrow, $3 million. Now we've got a client who's proven that they've got business ownership experience, they've proven they can run that type of business, and they've grown that business. Now they really have a resume for that next level, right? And so we see a lot of clients who start there and they want to expand into something larger. So that is definitely one way. Now I've got other clients who come in and say, we're going to buy this $10 million business. How much can you lend me? And we'll get them $7-8 million right off the bat. But those are typically our C-suite guys who've got that level of experience, and so it really depends. And like anything else, the sophistication of the buyers, vary, but as long as you meet the basic qualifications, which is reasonably good personal credit, some translatable experience, and you've got enough down payment, typically for 10%, with enough left over that you're not using up all your cash and leaving yourself, with $500 in your checking account, you're probably a good candidate if you want to buy a business.
So what I'm hearing is there is a process, but realistically, you need that advisor like yourself to be able to guide you through it. And there is some hoops, for lack of better words, because we are talking about government guarantee and all that sort of stuff to be able to do it. So the other question I have for you is, what kind of flexibility is there available? I mean, if let's assume you don't fit all 4 corners of the underwriting guidelines, what kind of wiggle room is there?
Yeah, well, SBA loans are flexible by nature because they allow banks to lend money that they wouldn't otherwise lend because of the risk. So that the guarantee mitigates a lot of risk for that bank to take that risk on that deal, right? So there's a lot of flexibility in the program in terms of how we can structure a deal, and that's where a guy like me comes in. Is, again, there's a lot of people in the world who do SBA loans. There's a handful of people who know how to structure the deal, so one, that it'll work 2, that it makes sense for the buyer or the borrower, and 3, that we know it's got a very strong chance of repaying on time, right? The last thing, I've made plenty of money in my career. I'm not in it. We all work for the check to some level, right? Of course, but I'm more concerned about making sure the client, before we put them into an SBA government guaranteed loan, that they can repay that loan without worry, right? There's always risk, but my first priority is making sure that we've got a structure that makes sense, not only for the lender in the deal, but the client too. So we have a lot of flexibility. The SBA has certain rules, for example, on business acquisition loans. If there's no real estate involved, the longest amortization you can have is 10 years, right? So that's a ceiling, right? Or that's a boundary. But within the structure, there's a lot of different things we can do between seller notes and seller, things seller can help to do to structure, including, for example, if there's a licensure required to run, say, an electrical contractor where the seller can benefit. Maybe the buyer doesn't have the license yet and the seller can help with that. So there's all these different things that 20 plus years of experience have helped me be able to use for the benefit of the client in how we structure. So there's a lot of flexibility in how we do that within the boundaries of the program guidelines. Yeah.
Wow.
Yeah.
So in your experience, is there one specific thing that would cause the most delay in the approval and the closing of these loans?
Yeah, it is. It's being in a position, and again, I'll go back to the business acquisition, because you have a seller who needs to provide information in that case and a buyer, right? So you've got 2 groups of people who need to provide quite a bit of documentation, right? So if one of those 2 people aren't providing documentation in a reasonable amount of time, it can take forever, right? So one of the first conversations we have with the borrower and the seller in acquisition is, here's what it's going to look like. Here's a list of the documents we need. How long is it going to take you to get us this information? And if we have a cooperative seller or a cooperative buyer, it makes all the difference in the world. When you've got a seller or sometimes a buyer or client who isn't getting us information, we're having to wait a week to get a couple things and then wait another week for the next. It can take forever, and that's when the process can really drag out, and that's where the reputation for SBA lending, any negative connotation comes from those instances.
So what's the typical time frame from application to closing? How does that take?
I've done them from start to finish in as little as 30 days.
Wow.
That's not typical. So the typical process is anywhere from 60 days to 120 days. Again, it can be condensed, but that 70, we'll just say 75 days is probably typical, 2.5 months.
That's great. So
yeah.
I know you're based in South Carolina. Are you only focused in the South Carolina area, the Southeast America? Can you be throughout the whole United States? Tell me about what your business is.
Sure. Yeah. Great question. So it's funny because we moved here back in 2016 for work, and then of course after COVID, it turns out that in the type of businesses that we're in, you can work from anywhere in the world. We've got somebody who lives out in the Middle East who works for a company that I worked for, and it's seamless in terms of with the technology. So I'm here in South Carolina. I live in North Augusta on the river, across from Augusta, Georgia, which of course where they play the Masters tournament. But we can and do lend anywhere in the United States, right? And so I was previously with a lender. I was one of the top producers, and then back in July, I actually left to come to Main Street Funding Group with a good friend of mine who owns it named Kenny Prosky. And basically, as a lender, when you look at a number of deals, there's some deals you can do, and there's a lot of deals you can't do, right? As a lender broker now, I can look at every deal, and unless it's just a terrible deal, I've probably got a home for it. So we work with some of the best lenders in the country, whether if the deal's in California, we know some great lenders out there. If the deal's in New York, the deal's in Florida. So we go anywhere in the country, and we get referrals from everywhere in the country. and we work with the best lenders in each area for a particular type of deal, right? So we know that certain lenders may like restaurants, other lenders really don't, right? Yeah. So if you're taking the loan to the lender yourself, it's a bit of a crapshoot to even if they like restaurants. If you're trying to buy a restaurant, well, we don't waste any time. We go right to the two lenders that we know like restaurant deals, and so to your question about saving time in the process, that's one of the big advantages of working with us, is that we know who wants to do the loan right off the bat.
That makes sense. Now, I'm going to ask a question, which I'm going to need your crystal ball. So, what's been in the news right now is the potential of a government shutdown if they don't do all the budget stuff that's happening this week.
Yes.
As early as next week, there may be a government shutdown. If that's the case, how does it impact you in SBA loans?
That's a really good question. So, if each time a loan goes up for approval, an approval authorization with the Small Business Administration has to be had, right? Now, all the lenders that we work are called preferred lenders, so they can actually authorize their own loan on behalf of themselves by the SBA, right? Because the SBA's vetted them and say, you're a competent lender, you make SBA loans the right way, and therefore you can actually approve your own loan. You go onto the system, you pull an authorization number, right? So the SBA is one of the entities that does get shut down in a government shutdown. So if you've got a loan that has not been approved, but it needs to be approved during a government shutdown, you're going to be waiting for that approval. Now, the bank itself can approve it, but the guarantee portion won't be approved until the SBA reopens, right? So we approach it two ways. One, in our pipeline, we've got several clients who are very close to getting an approval. So we try and push those along quicker as we approach the end of the month here with the possibility of a shutdown, so that those can be approved and those authorizations for the SBA are pulled. And then obviously the process continues through closing it. The SBA doesn't need to be open to close the deal. It just needs to be open to approve it. And for the deals that aren't going to make it before the shutdown, then we just keep working to make sure that when they reopen it, we've got everything we need. The only thing left to do is to get onto the system, input the deal, and get the authorization, right? So we don't really waste any time, but depending on how long the shutdown is, it can affect a deal. But that's something that, obviously we address, again, in an acquisition with the sellers and the buyers and let them know what we're up against. And it's typically not an issue in terms of getting contract extensions and things, because everybody knows that, if the government's not open, we can't get the deal done without the approval.
Understood. Wow.
Yeah.
Learned a lot in this last 30 minutes, and I appreciate it. So,
sure.
Eric,
Yeah.
you've given a lot of information out. How can someone reach you? What's the best way to get a hold of you?
Yeah, you can reach me out with Main Street Funding Group. We're physically located. The main office is down in Stuart, Florida, but again, we can be anywhere. My email is edunham@mainstreetfundinggroup.com, or my cell phone is 706-750-5982. And you can reach me. I'm not a 9 to 5 guy. I've got clients that call 9, 10 o'clock at night sometimes because they have questions or they're anxious. And you can pretty much reach me most any time you need me.
Is LinkedIn also a good way to get to you?
Yes. Yeah. My name. If you go to Eric Dunham at LinkedIn or look up Main Street Funding Group, but yes,
awesome.
I'm there.
Awesome.
Yeah.
So Eric, I can't thank you enough for your time. So everyone, I appreciate you attending this session. Of course, please reach out to Eric if you have any SBA loan requirements or even just having a conversation. And of course, please like me on LinkedIn and AiCR on LinkedIn. And until the next episode, which is in 2 weeks, until then, enjoy it and we'll see you soon.
Thanks, Joe.
Thank you.